Good day everyone. I will take you through the key tax-related proposals highlighted in the 2026 National Budget of Sri Lanka, VAT to replace certain existing levies. Two significant changes have been proposed relating to indirect taxes. Firstly, imported coconut oil and palm oil are currently subject to the special commodity levy. The proposal is to remove this levy and instead bring these products under the value-added tax system. Similarly, imported fabric, which is currently taxed under cess, will also be brought under VAT. This reflects a shift towards a more VAT-driven tax model, increasing transparency and improving revenue collection. Lower VAT and SSCL registration threshold. The annual turnover threshold for mandatory registration for both VAT and Social Security Contribution Levy is proposed to be reduced from 60 million rupees to 36 million rupees. As a result, a large number of small and medium-scale businesses will fall within the indirect tax net, broadening the tax base and supporting revenue mobilization. SSCL on motor vehicles. It is proposed that the Social Security Contribution Levy be charged at the point of importation or at the stage of manufacturing and selling vehicles. Importantly, SSCL will not be charged at the after-sales stage. Revision of customs import duty rates. In line with the national tariff policy, the current customs duty bands of 0%, 15% and 20% will be revised. A new 4-tier structure of 0%, 10%, 20% and 30% is proposed. The revision provides more flexibility in tariff application based on economic and industry needs. Investment incentives to boost SME growth. To encourage new investments, particularly among small and medium-sized enterprises, it is proposed to reduce the minimum investment threshold required to qualify for enhanced capital allowances. Enhanced capital allowances are available at 200% for Northern Province and at 100% for other provinces. Currently, the threshold stands at $3 million. This will be significantly reduced to $250,000. This measure aims to attract more local and foreign investors, support SME expansion, and stimulate economic activity across multiple sectors. Tax relief for digital infrastructure expansion. Under the Digital Technology Expansion Program, a tax suspension is proposed for newly constructed communication towers. This tax exemption will apply for a period of 5 years and is expected to accelerate digital infrastructure development and enhance connectivity across the country. Bad debt relief for telecommunication levy. A favorable change is proposed for telecommunication service providers. Any bad debts incurred may be deducted when calculating the telecommunication levy. However, if such debts are recovered later, the recovered amount must be included for tax purposes. This aligns the telecommunication levy with general principles applied to bad debts treatment in tax computation. Strong AML and compliance framework. Legal provisions will be introduced to allow the tax authorities to share information with the Financial Intelligence Unit and other enforcement agencies. This supports compliance with anti-money laundering and countering the financing of terrorism regulations, improving transparency and strengthening Sri Lanka's international reputation. Digitalization. National e-invoicing system. A major transformative step is the introduction of a national e-invoicing system. An API-based integration will link taxpayers' ERP systems directly to the Inland Revenue's RAMIS platform. This initiative is expected to improve accuracy of reporting, reduce tax evasion, and modernize overall tax administration. Improved taxpayer services. The Inland Revenue Department plans to consolidate its head office and related divisions into a single premises. This aims to provide a more efficient, reliable, and convenient service experience for taxpayers and professionals engaged with the department. In summary, the 2026 budget proposals indicates a clear direction towards broadening the tax base, promoting investment, simplifying the tax system, and modernizing administration through digital transformation and improved governance. If implemented effectively, these changes are expected to create a more efficient, transparent, and investment-friendly tax environment in Sri Lanka. Thank you.